Hey, so the Fed is likely holding rates steady and crypto is watching closely. Let's talk about it. So on paper, this week's Fed meeting looks quite boring, right? I believe no rate cut, no rate hike, just a pause. But the funny thing is that in crypto, pauses matter more than people think. Despite a loud pressure from the US government, the Federal Reserve is expected to keep interest rates unchanged. Futures markets are already pricing this in, meaning the outcome itself isn't the shock, the signal is the shock. And you know what? Signals drive markets. And I want to use this video to convince why Fed doing nothing is still a big deal for crypto. You know, crypto doesn't move just on prices. It moves on liquidity, expectations, and narratives. When rates stay high, capital stays cautious, leverage becomes expensive, and risk assets cool off. And that doesn't mean crypto crashes. It means momentum slows, rotations happen, and weak narratives get exposed. So if you're in a crypto project because of the hype, this is the point you have to pay attention. You know, a rate pause tells the market one thing very clear, right? It means the Fed isn't ready to flood the system with cheap money. I mean, not again. And that is very important because the biggest bull runs in crypto don't start with hype. They start when liquidity gets in easier. You know, President Trump saying inflation is defeated and openly criticizing the Fed adds more tension. I mean, it does. It adds more political tensions. But one thing we should understand that crypto markets care less about the drama and more about outcome. If pressure on the Fed starts to grow, markets start pricing future cuts earlier, risk assets front run that expectation, and Bitcoin often reacts before even traditional markets do. And that's exactly the reason why you will sometimes see BTC move up even when rates haven't changed yet. Because crypto trades expectations, not headlines. At least not always. And you know what? High rates don't just hurt consumers with credit cards or auto loans. They also, I think, reduce speculative leverage, tighten venture capital, slow down altcoins funding cycles, and so on and so forth. And I strongly believe that this is why Bitcoin tends to outperform these phases. Because see, you would agree with me, if actually you have been in this industry for a while, right? You would realize that when liquidity is tight, Bitcoin looks like a hedge, right? Altcoins look like risk and meme coin narratives struggle unless liquidity returns. Yes, unless liquidity returns, all these things begin to cool off. But only Bitcoin. So a Fed pause often creates a BTC first environment, not an everything pumps market. And for me, that is the quiet bullish angle most people miss. And yes, the subtle part, the Fed holding steady while inflation cools slowly is not bearish long term. It's actually a base building. It means the system is stabilizing. Rate cuts are a when, not an if. And the markets have time to reset excess leverage. You know, historically, right? Crypto does best work after patience, not after panic. So you would agree with me that when the market feels so panicking, the whole system or the whole environment begins to mess up, all right? Tends to be so much chaotic. So let me make it simple, right? If Fed refuses to cut rate, it's so good for us because this is not the phase to chase hype blindly. I've been telling you that this is not the phase. This is not a time for all of us to start chasing some blind coins, right? It is the time to position early, favor strong narratives, and respect Bitcoin dominance. And also, I encourage everyone to be selective with altcoins because the Fed isn't giving easy money yet. There's no cheap money getting to a system, but it's also not really tightening further, all right? It's like it's not losing it, not tightening, right? And in micro terms, that is the difference between survival modes and preparation mode. So I believe crypto doesn't need the Fed to cut rates tomorrow. It needs clarity. We want to understand our position. We want to understand where we are now. Because a steady Fed tells the market we are closer to 10 that peak. And also smart money doesn't wait for the announcement. It positions itself before the story changes. So this is what I would say. Rather position yourself for the market rather than just hoping that the Fed cuts rates so that cheap money keeps flooding the market. Thanks for watching this video. I'll see you in the next video. Bye.